This Trading 212 portfolio update looking at what has been going on in this mad month of December. We've had a bit of a Santa Claus run over the first few weeks of December, with the S&P 500 being up 5%. The VIX has taken almost a 7% drop over the last month. FTSE 100 on that upward trend as well at just over 3%. But in the last day, a whole 1% of that movement has taken place, and that is all down to the Office for National Statistics bringing out their November data, which showed that there was a reduction of not just the consumer price index, including the owners' occupiers' housing costs, so the CPIH, coming down from 4.7% to 4.2%, but the one that everybody was a little bit shocked by was the consumer price index coming down from 4.6 in October to 3.9 in the 12 months up to November. And that caused a bit of a rally within the FTSE 100. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. Let's jump across into the Trading 212 portfolio, and within this is where I've been investing my stocks and shares ISA for this financial year. If we have a quick look at where was I a month ago, I was sat in around the £27,000 invested. Now sat at 28,243 invested into this portfolio, which is made up of 5 different pies. Last month, I was up about 3% in total, with the return coming in at about £800 in that portfolio. Now sat at over 7.6% up, and that's looking at £2,150. But what that does mean is I have been getting less for what I've been buying into in this portfolio. There has obviously been a little bit of movement in both the daily DCA and the monthly DCA, and we are currently sat with them absolutely neck and neck. There's a 0.01% difference between the two of them. The daily DCA just leading at 4.49, with the monthly coming in at 4.48. Within the daily DCA and the Own the World pie, I just have these 4 different ETFs: the FTSE S&P 500, the FTSE Emerging Markets VFEM, FTSE 100, and the FTSE Developed Europe X UK, and that is split at FTSE at 65%, 15% at VFEM, and 10% for both the VUKE and VERX ETFs. I have added to my growth portfolio. I now also have Pfizer in here on top of the Rolls-Royce that I hold. On Pfizer, basically, when it dropped a little bit earlier on the month because of their poor earnings call, I decided to invest, and I have bought in 20 shares of this, and currently with the FX impact sat at 5.5% up. This one is going to pay me in around that 6% dividend yield. So while I am hopefully getting some appreciation in the growth of this stock, I'm also going to be getting a little bit of a kickback as well from the dividend yield. Obviously, Rolls-Royce doing exceptionally well within this portfolio, and I think it may be the one that is up the most at 35% up. I also hold this in my old free trade account, and it's up over 200% there. I just wish I'd bought in a little bit more into that holding. Even though I invest mainly into ETFs, and actually on that daily and monthly DCA, it's either £10 per day or £307 per month that I am investing into there. So in total coming in at just over £600 into those ETFs over the month. I do sometimes invest a little bit into the individual stocks within this pie. For those of you who are very observant, you will see that I only have 19 stocks within this pie. I have sold about £75 worth of Sainsbury's earlier on in the month and have just reinvested that back into some more purchases just to top up British American Tobacco, as it was down on some negative news. I've invested an extra 7 stocks of that. I've also added to Anglo American and bought in a few additional shares as it dropped in price. But let's do a quick run through some of the stocks that I hold in here. Realty Income over the last month doing reasonably well, and that one is up 8.7% over the last month. That is looking at paying me now. Remember, only a month or so ago, at the end of October, that was at over 6% dividend yield. They have announced a small increase in their dividend payout as well per month. So looking at that, bringing in probably about £26-27 per month at the moment. IUKD over the last month has been on a little bit of a rally. That one is up 3.44%, and that's going to be paying me a nice little dividend yield of about 5.4% at the moment. British American Tobacco took a bit of a dive, as you can see on this chart, and dropped about 7 or 8% in the day. So I bought in at a lower price and have bought in about an additional 7 stocks of British American Tobacco. And I'm expecting that to be paying me somewhere in around the 10% yield. VMID also been on a bit of a run, now sat at over the £30.27 mark and looking at paying out a trailing dividend yield of about 3.5%. I bought this in at just under £28, so currently up about 8%. Legal & General, another one that is up about 8%. And in total, my return looking at somewhere in around that 13%. And that is paying me a nice healthy dividend yield of about 8%. Next stock that I have is 60 shares of National Grid. This one looking at being up about 4.5% over the last month and returning a nice almost 10% increase and a dividend yield of 5.41%. Lloyd's has been on a bit of a run over the last month and it is up to almost 47.5 pence. That's about as high as I have seen it for quite some time. Last time we were up at that kind of height was way back at the end of April of this year. I've got a return at the moment of about 11.22%, and this one is paying me dividend yield of 5.36%. Primary Health Properties, another one that is doing reasonably well within my portfolio. As you may have picked up, I did pick up some additional shares of this last month. Up this month almost 7%, and quite a bit of that was a jump today, and I did get an alert earlier on stating that on the back of the ONS data it was definitely looking as if it got a bit of a bounce off of that. CPI figures down to 3.9. That saw almost a 5% jump in value and currently paying a dividend yield of 6.57%. Some of the miners within my portfolio have taken a bit of a beating over the last month. Rio Tinto is not one of those. It is currently almost up 5%, and that's showing a return on what I bought in at of almost 19%. And that one is paying a dividend yield of 5.6%. Renewable Infrastructure Group, TRIG, as many people know it, it is up about 3.5% over the month, and we are getting close to that break-even point. Currently down 0.37%, and this is paying a dividend yield of 6.52%. GSK having a bit of a bumpy ride over the last month, but all in all, still up 2.64%, and those 40 shares that I have currently being up about 7.25%, paying a dividend yield of 3.86. If this continues to get a bit higher, I will consider on what I'm going to do with this stock, whether I sell out of it, take some of the profit and look at investing that somewhere else, potentially to get a slightly higher dividend yield. But GSK is a quarterly payer, so I might just keep it within my portfolio. What would you guys do? Would you sell out of GSK and potentially come back in when it is looking a little bit cheaper? Or would you just hold on to it? Taylor Wimpey might be beating my Rolls-Royce holding, currently up almost 15% this month and coming in at a whopping return of 35.43. The house builders really have been on a bit of a rally. As we can see, they jumped a little bit this morning, but have leveled off a little bit later on in the day. Taylor Wimpey paying 6 2/3%, and we'll see whether I start to consolidate a little bit more into there. There might be a bit more room for rallying within some of the house builders. I must admit, Anglo-American is not looking that healthy. It took a big drop earlier on in the month, basically when it was revising some of its projected earnings, looking at quite a considerable pullback, and that saw quite a huge slump in the stock price, and that was down about 8 to 9% in one day, and that sees over the last month being down 15%. Currently sat at about 9% down on the holdings that I have in Anglo-American, but as I said, I did buy in an additional 10 stocks of Anglo-American just to take benefit of some of that drop that we had. And if you look at the sort of 52-week range, it is down towards the bottom end of that range. Currently paying 5.56% dividend yield. Glencore fared a little bit better, but you will see earlier on in the month there was a bit of a drop off. It has seen a bit of a rise back up, looking at being up about 0.8%. Currently up just over 5% on this holding, and it's paying a dividend yield of 7.42. IG Group, another one that has had a bit of a ride up over the last month, up at about 11%. Increase, and that's showing a growth of about 15% within the portfolio and paying a 6.12% dividend yield. UKW coming in at about a 3% growth over the last month. That's up 8.6% within my portfolio, and that is looking at paying dividend yield of a little bit less than Trig, coming in at that 5.78%. DS Smith, another one that has increased by about 9%, looking at a current return in the green of 12% and dividend of 5.87. Vodafone down almost 10%, the worst performing stock that I do have within the portfolio at 13% down. How much more can it actually drop? Currently sat at 67. Is anybody buying in at this price? Or do you think that 11.57% dividend yield is a bit of a dividend trap? And then finally, ICP, one that I wish I'd bought in a lot more, is this month currently up 10.5%, looking at a 32% up in the portfolio and paying a 4.61% dividend yield. All in all, first time in a very long time that I have had all of these pies showing green. As I said, I do like to invest into dividend ETFs. Why don't you go and have a look at this video, which gives you a comparison of 11 different dividend ETFs that you could potentially go and do a bit more research into to see, do any of them make it onto your list to buy? You might recognize a few from the portfolio that I've just shown you. Thanks very much for watching, and I will see you in the next one. Cheers, bye.